This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's now go through and have a look at the second aspect of our complex group structure. So remember, the first bit was whereby we had the parent, the subsidiary, and the sub-subsidiary, wasn't it? So your vertical complex group structure. What we're going to go through now and do is just have a look at this D-shaped complex group structure. Okay, you'll be glad to know that based on what you've learned already with your vertical group structures, there isn't too much extra to go through and include, which is a bit of a relief, isn't it? So what we've got there, as you can see, you've got A there that has a 60% ownership there in B. So clearly that makes A the parent, doesn't it, as it has control over B. Okay, so B is the subsidiary. Nice and easy to see there. So even if you get a D-shaped complex group structure question in the exam, you'll be able to work out the goodwill, you'll be able to work out the non-controlling interest, you'll be able to work out the group retained earnings, all to do with that subsidiary. Okay, the issue that you've got now is that if you look at B's ownership in C, you can see there that B's ownership in C is only 40%, isn't it? So that 40% ownership doesn't necessarily give A, if you like, indirect control of C, does it? Okay. Previously, when we had our vertical group structures, the parent controlled the sub, and then the sub had enough of the ownership and the voting rights to make that the sub-sub, didn't they? Okay, but here C, at this moment in time, is not a sub-subsidiary, but because of this holding that A has in C, this 25%. So what we can refer to that as is your direct holding. And what you can see there is that A has a direct holding of 25% in C, which just begins to make us think ever so slightly. Because if A can cast 25% of the votes in C, and if B can cast 40% of the votes in C, now don't forget that A controls B, so A can tell B how to vote when it attends the meetings in C. So A can tell B how to vote. A will vote in its own way, which presumably will be in the same way that they've told B to vote. And all of a sudden, if you go through there and add together those two boxes, you've got 40% of the vote in C, you have 25% of the vote in C, so therefore you control 65% of the vote in C. Now, if that's the case, you have the power to direct the activities of C because you have enough voting power to be able to pass an ordinary resolution. If you can pass an ordinary resolution, then you can appoint the directors in C. And if you're appointing the directors, you can tell them how to act. So therefore, C becomes, is it a sub-subsidiary? Okay. And you have a D-shaped complex group structure. Okay. Everybody happy with that there? Okay. When you combine the ownership that B has in C with that direct holding that A has in C, if that is enough to give you greater than 50% of the voting rights, then you have control. You have the power to direct the activities because you can pass an ordinary resolution and put in place your directors. Okay, excellent. So what you've then got to go through and do is obviously we can work out the non-controlling interest in B, because what you've got there is that you have a 40% non-controlling interest in B, don't we? But to work out the non-controlling interest in C, we have to go through there, don't we, and think about the effective level of control. So if we're looking at the effective level of control, so the effective controlling interest, all we do again is that we multiply down the spine. So 60% of 40. But don't forget to add on that 25% direct holding. So 60% of 40 is that 24 plus 25. Does that give me 49%? If that's the case, then if we effectively control 49, then the effective non-controlling interest must therefore be 51. Okay, so do just be careful. We have an effective level of control of 49%, which is less than 50, isn't it? So it might lead you to think there that C is some form of sub-associate. Okay, but if you think about the voting power, the key bit that we've got there is that we have the rights to cast 65% of the votes in C. So therefore, C is a sub-subsidiary. Okay, vitally important. Vitally important that you can determine that that company at the bottom of the group structure is a sub-subsidiary, and vitally important there that you can work out the level of effective control by multiplying down the spine and adding on the direct holding, and then from that you'll then be able to work out the effective non-controlling interest. Once we've got that, we then need to think about how that impacts the workings, and to be honest, it doesn't impact it all that much from what we've seen previously. Okay, the only working that it has, pardon the pun, a direct effect on is the goodwill calculation. So if we have a look at the goodwill calculation that we have here, the goodwill calculation in the sub B is unchanged. So you see it'll have the fair value of the consideration, add on the non-controlling interest to acquisition, and deduct the net asset to acquisition. So again, ladies and gents, you have to say that is easy. There should be at least 3 nice straightforward marks there within the exam, 1 for each number that you put in. The sub, so company C, it doesn't change too much from what we had previously. You've still got that the indirect element. So B has an investment in C. So what we have to do there is we have to put in P share. So that's 60%, isn't it, of the investment that B has in C. And then the new bit that you've got that didn't exist before is there. Don't forget that now A has that direct holding in C. So how much of that do the parent own? Well, the parent owns all of it, doesn't it? So therefore, we're going to put that in 100%. So when you're looking at the fair value of the consideration, there are now 2 things to consider. You need to consider the direct holding, that holding that A has in C. And then you also need to look at the holding, which we can refer to as the indirect one, whereby B has an investment in C, and we need to look at how much does the parent own. So here, based on our information, the parent owns 60%, wasn't it, of company B. So when you're looking at the indirect part of your goodwill calculation, you put 60% of the investment that the sub has in the sub. Okay. Yeah, I think that's starting to get a little bit tricky. Yeah, that's pretty hard, but couldn't care less, ladies and gents, because what you have there is underneath. Everything else there should be pretty damn straightforward. Okay, you've got the NCI acquisition, again, fair value method or proportionate share of net assets, and then you deduct the net assets at the date of acquisition. Okay, again, if you're looking at the NCI acquisition, that's going to be based upon the proportionate share of net assets, and if it is, you need to work it out based upon the effective level of the non-controlling interest. Okay, so hopefully you're happy having gone through there and just recap the introduction that we went through with regards to our D-shaped complex groups. What we're going to go through and do now is we're going to go and have a look at an example. So the example there, all about D-shaped complex group structures. Before we read the requirement, you can probably guess what the requirement is going to be. But you can always tell within the exam immediately what you have with regards to your group structure based upon the investments. Okay, because what you can see there is that Callis has not just 1 but 2 investments. So it has an investment in Stain, but Callis has an investment in Adams, as does Stain. So you can sort of guess fairly soon that Callis is the parent, and Callis has the investment in Stain, which is probably the sub. Stain has an investment in Adams, and also Callis has that investment in Adams as well. Okay, you got that? Yeah, you've got Callis at the top, And you can see there that Callis has an investment in Stain, hasn't it? You can also see that Stain has an investment in Adams. And then you can also see there that Callis has an investment in Adams as well. So it's looking like a D-shaped group. So when you immediately see the group statement of financial positions, have a look at that little bit there to do with the investments to see if there's a bit of a clue as to what's about to hit you within the exam. Okay. Having said that, let's forget about that. It goes on there in terms of the requirement. Again, it wants you to look at the statement of financial position. It wants it for the Callis group. So Callis must be the parent. And it must be there December 2015. Okay. So we know that Callis must be the parent, mustn't we? So what you've got there is that, as anticipated, Callis is the parent, and we're expecting Stain to be the sub and Adams to be the sub-sub. But don't anticipate it too much. Make sure you go through there and determine what you have with regards to the group structure. Okay. So what we've got there, it says on the 1st of January 2015. So again, the same exam style question. The information at the start of a group SFP question is all about the group structure and helping you with the goodwill and the fair value of the non-controlling interest. Okay, and helping you with the net assets calculations. So it says Callis purchased 60% of the equity share capital of Stain for 95 million. Let's forget about the 95 million. Let's go through there and think about the workings. What we have there is we have Callis owned 60% of Stain. Okay, and that took place there. Was it on the 1st of January 2015? So right at the very start of the year. Okay. It tells us the information about the cash consideration, which will help us with the goodwill. It says the net assets at fair value was 90, so that's going to go into working 2. The non-controlling interest is 25, so that's going to help us with goodwill and NCI. And the fair value of the net assets at acquisition was not materially different to the book value. Hurrah! So there's no fair value adjustments. In the exam, there is likely to be a fair value adjustment. Okay, but here we're keeping it simple because I want you to focus on the D-shaped complex group aspect. Okay. Then it says on the same date, both Callis and Stain each acquired a 30% holding in Adams. Okay, so both Callis and Stain bought a 30% holding. So what you've got there is you have Adams at the bottom, of which Stain bought 30%. On the same dates, so presumably the same date there is that 1st of January, then what you've got there as well is that Callis also bought 30% of Adams. Okay, so what we've got there now is that if Callis is able to cast 30% of the vote in Adams, and if Stain, over whom Callis has control, so remember, Callis is the parent, Stain is the sub, so Callis controls Stain, so can direct how they cast their 30%, which presumably they will cast in the same 30% way in which Callis does. Then what you've got there is control, isn't it? Because when you go through there, total up those two boxes, the 30 plus the 30 gives you 60%, doesn't it? So therefore, Adams becomes a subsidiary, doesn't it? Okay. In terms of the level of the non-controlling interest, well, here it's clearly 40% in the sub, isn't it? If you're looking at the subsidiary, well, we need to work out, first of all, the effective controlling interest, don't we? So what we have there is we multiply down the spine, 60% times 30, and then don't forget to add on the 30 as well. Okay, 60 times 30, 6 is 18, so is that 18%? Plus 30 gives me the 48%. So therefore the effective non-controlling interest is there as 52, isn't it? Okay, shall we just double check to make sure that everything is okay before we proceed? Yeah, 48%, and 52. Okay, so I think when you've got a complex group structure, it really does help just to take a little bit of time at the start to work out what's going on. Okay, you don't get any marks for it. There's nothing exciting happening, but it puts your mind at rest. Then what we've got is we're going to go through there and look at working number 2, aren't we? Your net assets. So here, like before, we're going to need, is it 2 net assets workings? So first of all, we're going to go through there and look at Stain, who remember is the sub. And then afterwards, we'll go through there and look at the sub, which is there as Adams, isn't it? So again, we've got there at the reporting date. At acquisition, and then your post-acquisition. Remember, the reporting date figures, they come from the statement of financial position, don't they? So what we have there in terms of the SFP of the sub, you can see there is it that we have 40 and 90 share capital and retained earnings. So share capital, retained earnings, 40,000 and 90,000. Okay, excellent. Remember, the share capital at the reporting date is exactly the same as what you have at acquisition. So that there is 40,000. No other components of equity, no PUP adjustments or anything like that within the question. Don't even think there's any fair value adjustments because it told us the fair value was the same as the book value. Okay, so it tells us the identifiable net assets were there as 90 million. So again, similar exercise to what we've seen previously. You're told that the net assets are worth 90. So to work out the retained earnings, that will be a balancing figure, won't it? So that there is 50,000. 40 and 90 is that 130,000. So the post-acquisition movement is there as 40. And again, all of that belongs to retained earnings because there's no other components of equity to adjust for. There could be within the real exam. Okay, so that's Stain, all done and dusted. Let's go through then and look at, is it Adams? Adams is the subsidiary, isn't it? So again, when we're looking at Adams, we want to go through there and look at the reporting date. We want to look at what happens at acquisition. And then we also want to look as well what happens post-acquisition, don't we? And if memory serves me right, we had, was it retained earnings? Sorry, share capital and retained earnings. So again, the figures at the reporting date, where do they come from? Correct. Statement of financial position. So what you've got there is 30 and 40. Okay. So we have there, is it 30,000? Is it 40,000? And I think I sound like a broken old record, if we can use that phrase. Do people still have records? Don't know. It's all digital these days, isn't it? Maybe I sound like a song on MP3 that's buffering. But what you've got there, to repeat, as we've seen several times before, the share capital at the reporting date is the same as what it is at the date of acquisition, isn't it? Okay, so no need to change it. Okay. Just a little bit different here. It says the retained earnings were 30 million. Okay, so it actually tells us that the retained earnings were 30 million. So that 60 is that 70. Post acquisition is there as 10. Okay, excellent. There we go. Again, nothing else to adjust for. The fair value of the net assets was not materially different to the book value, so no fair value adjustments. As I said, in the exam, the likelihood is there will be a fair value adjustment. There will also likely be some form of other component of equity. Okay, but it becomes so straightforward in the exam because you're dealing with the same things time and time and time again. Okay, excellent. So what we can go through and do then is we can go through now and start to look at, is it the goodwill? So working number 3, if you so wish, and looking at goodwill. Remember, when you have a complex group, we have that columnar format, don't we? So you've got there, is it the goodwill in Stain? And is it the goodwill in Adams? Now remember, when you're looking at the fair value of the consideration, don't forget that in Adams, we've got the direct and then the indirect element. So that's where you just need to be a bit careful. Don't forget, we need to add on, I think, the fair value of the non-controlling interest. And then we need to deduct, is it working to, not the date of acquisition. Okay. Again, what I would do is I would always start with the sub first, because that's no different to what we've seen before. It doesn't even involve complex group structures. It's just like a fancy bit of F7. So here we bought it, was it for 95 million? The NCI was 25, and we already know what the net assets were at 90. So what we have there, is it 95,000 is the fair value of consideration. The NCI is there as 25,000, and the net asset to acquisition where there is 90. Okay. So does that give me there, is it goodwill in the sub of 30,000? Okay. There we go. Nice and straightforward. Again, if you're thinking about Adams, get the easier bits first. Now, the easier bits first are that it tells us the NCI was there at 4 million. Okay. So we can put in the NCI. We know that there is 4 million. So remember, we're working in thousands. So that's 4,000,000. The net asset to acquisition, well, we have that there, don't we? In working 2 of Adams is there as 60. So we can put that 60,000 in there. Okay. And then the harder bits. So we need to look at the fair value consideration. We need to look at the direct and the indirect holding. Okay. Now at the bottom there, it doesn't tell us how much we paid. It just tells us that we bought 30%. So what we need to go through and do there is we need to tie that back up, don't we? Yeah, to what's there within the financial statements at the top. So remember, Stain is the sub, Adams is the sub, and you can see there that Callis has a 60,000 investment in Adams. So that there is a direct holding, isn't it? So the direct holding, what Callis owns in Adams, so what the parent owns in the sub is 60,000. So the direct is 60,000. The indirect is where we just need to be a little bit careful, isn't it? Because we know that it is 60,000, but don't forget what we need to adjust for there is the fact that that 60,000 is sat in Stain's books, and we need to take P share, don't we? We need to take that 60% of it. So what we're going to have to do there is that indirect element is 60% of the 60,000. Does that give me 36,000? Does that go through there and give me goodwill of $40,000? Okay, 40 million if we're working in thousand, isn't it? Okay, so 40,000. There we go. So the new bit is here. That's the new bit, and that's the only additional bit that you need to consider. The indirect holdings is exactly the same as what we did before when we were looking at your vertical complex group structure. Okay, just because now it is a D-shaped complex group structure, we throw in the direct holding in full. So what the parent has paid to acquire its shares in the sub-sub. Okay, so if you were to total the goodwill, 40 and 30, I think that is there as it as 70. Okay, we'll look at that later. Then what you've got working number 4 is looking at the non-controlling interest, isn't it? So we've got the non-controlling interest in Stain. You've then got the non-controlling interest in Adams. Again, best practice, put in the NCI ownership. So the non-controlling interest in the sub is 40, and in the sub it's 52. So here 40%, here 52%. And what we've got there is, remember, we need to put in the non-controlling interest at acquisition. So they're the figures that we get from working 3, which should be nice and straightforward. So is that there 25 and 4? So you've got your 25 there and the 4. So 25,000. And is it 4,000? And then we need to add on the non-controlling interest share of the post-acquisition figures that appear in working 2. And that's why we put the percentages, because you've got there, 40% of Stain, and is it then 52% of Adams? Okay. So what have we got? If we go and look at Stain first, post-acquisition profits are 40. So that's 40% of 40,000. So 0.4 times 40. Yep, 16. I know I can hear you shouting at me, Chris, it's 16. But I just want to double check. And then on Adams, you have there, 10? Okay, as the post-acquisition profits. So the 52% of 10,000 is that there as 5,200. It's then that you think, right, I'm done, I'm dusted. Be very, 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 very careful, because remember what you've got to do is that very, very, very hard adjustment. Where you need to take the non-controlling interest share of the investment that is held within S's books, isn't it? So remember, when we're looking at the sub, we want to look at the pure sub, so we want to remove anything to do with the subsidiary. So what there is to do with the subsidiary is that there is a 40% holding that we need to remove of the investment. S has an investment in the sub. If you don't believe me, it's there, isn't it? Okay, it's that indirect amount. Yeah, so we need to remove the non-controlling interest share of that 60,000. So 40% of 60 is there as 24,000. You're probably sitting there thinking, yes, I remember that. Trust me, in the exam, you won't remember it until you walk out of the exam room. Okay, you will have forgotten it. Do not worry about it one bit. Okay, so if I'm totaling things up in the sub, is it 9,200? In the sub, 25 plus 16 less 24 must be 17. And if you add them together, does that give you 26,200? Okay. And breathe. That was really difficult. Okay, I think that's a real challenge. Okay, again, there's 5 numbers you've entered, 5 marks. I think you could get 4 out of those 5 pretty easily. Ignore that ridiculously hard mark that we spoke about at the end and move on. Okay. We can then go through and have a look. Is it at working number 5, which is your group retained earnings? So that's whereby we want 100% of the parents' retained earnings, which is 80. Okay, so 100% of P's retained earnings is 80,000. We then want to add on, is it our share 60% of the sub, and was it 48% of the sub? Okay, if you can't remember the post-acquisition profits, you have 40 in the sub and 10 in the sub. So we've got there, is it 40,000 and 10,000. 60% of 40 is that 24. 48% of 10 is 4,800. So 80,000 plus 24,000 plus 4,800 gives me 108,800. Okay, there we go. Ta-da! Magic. Now the true test, isn't it? The true test is about preparing that group statement of financial position. Does it balance? Who cares if it balances? We've done everything. If there's a slight mistake, doesn't matter, does it? So what you've got there, if you add across parent, sub and sub, non-controlling, or sorry, non-current assets, 174 plus 60. Okay, so we'll just call it non-current assets. It's 100,000 plus 74,000 plus 60,000. There's been no adjustments in terms of value adjustments to do with PPE. So we can just add those across. Does that give me 234,000? Don't forget that you've then got also, is it your goodwill? Goodwill comes there, is it from working 3? So that's 30 plus 40, is that 70,000? We can ignore the investments, and we can then play around with the current assets of 50, 45, and 28. So 50 plus 45 plus 28,000. 50 plus 45 plus 28 gives me there is that 123,000. So 234 plus 70 plus 123 gives me 427,000. Okay. Is it going to balance? That's the key, isn't it? So let's have a look at the equity and liabilities. So we've got their share capital, still 100% of the parent only, which is there as 150. So we can put that in 150,000. We can go through there and play with the retained earnings from working 5 and the non-controlling interest from working 4. So let me just have a look. Retained earnings, right page, there we go. It's a bit of luck. 108,800. The non-controlling interest, just hidden at the bottom there, 17,000 plus 9,200. So does that give me 26,200? And then I think we've got just the usual non-current liabilities and current. So non-current 35, 30, and 5. It's about 70,000, isn't it? Excellent. And then the current liabilities, 40, 19 and 13. 40, was it 19? I will just double check. And 13. 40, 19, 13. 40, 19, 13. 40 plus 19 is 59, plus 13 is that 72,000. If I add it up, 150,000 plus 108,800 plus 26,200 plus 70,000 plus 72,000 gives me 427,000, which, excellent, it balances. So in the exam, you get a nice little warm glow inside you because you've got 42,7 on the top, 42,7 on the bottom, and everything works. Okay. So that example, in terms of exam standard, is nowhere near exam standard, but it's exam style. Okay, it's exam standard with regards to the complex groups, but there's going to be lots of other bits on top of it with regards to fair value adjustments. There could be impairments, and then don't forget that there's all those bits and pieces that will go on to test the individual accounting standards. But before you get there, you need to make sure that you understand this. Okay, and by this, I think the key bits to go through and understand are the goodwill calculation. So making sure that you're happy with particularly the goodwill over on this side to do with the sub. And then also the most important bit I'd have thought in terms of the level of difficulty, but just ignore it, it is over on that far side there, is thinking about that complex adjustment so that we are then looking just at the pure subsidiary with regards to the NCI. Okay, but don't worry about that whatsoever. It's the hardest mark that you're likely to try and get. Don't be clever. Don't waste your time. Move on. And that's the best thing to do now, isn't it? That's the end of the chapter. Have a go at some of the questions. Keep yourself up to date and up to speed with how things are going. Hopefully, you're getting stuck into all the groups questions and understanding at least the basics to ensure that you can pass the exam questions. And I'll see you in the next session when we start to look there at changes in group structure.